Hello traders, you are welcome to this video and you are welcome back to the Forex Geek channel. So in this video we are going to be diving deep into the Fibonacci Trend Line Strategy. Alright, it's a powerful technique that you can use to elevate your technical analysis game. Okay, in as much as this is an effective technique, please note that it does not guarantee profits. Alright, so whether you are a beginner or an experienced trader, this strategy can enhance your trading, all right? And it can be a useful addition to your trading toolkit. So you might want to grab your notepad because we're about to get started. So first of all, let us break it down, okay? The Fibonacci trend line strategy combines two essential tools: the Fibonacci retracement or extensions and trend lines. Basically, it's as easy as that. All right. Now, the Fibonacci retracement, as we can see, the Fibonacci retracement levels helps us to identify potential areas of support and resistance. All right, based on key ratios like the 23.6%, the 38.2%, the 50%, 61.8%, 78.6%, and so on, 100%. Now, trend lines, on the other hand, highlight the direction of the market. Okay, for example, we can see that with the aid of trend line, we knew that this was a bullish trend. Okay, and then we had a breakout around here. So the trend line helps us to identify the direction of the market and show us where price might reverse or continue, because we can see with the aid of this trend line, we can see that prices are likely to continue upward as the price bouncing off the trend line and moves upward. The trend line serves as a dynamic support, all right? And then when you have a breakout through the trend line, we can then look for opportunities in the direction of the breakout. Okay, so let me show you how to make use of these tools together. The first step is to identify a clear trend on the chart, like what we did here, right? Make sure that you see price making higher highs and higher lows. Use that to determine that there's a bullish trend. In the case of lower highs and lower lows, obviously you know that that's going to be a bearish trend. Okay, yeah. So the next step is to draw the Fibonacci retracement tool from the start of the trend to the end point. As you can see, I drew the tool from here to here, right? I started from here to here. Okay, in as much as this trend did not last, right? We had a reversal just right about this point. Okay, remember that the Fibonacci retracement tool is better used in a trending market. Okay, it's better used in the trending market. So ideally, if this trend were to continue, this Fibonacci retracement would have given us an idea as to where the pullback will end, okay, before a bullish continuation. But the trend eventually did not continue. Okay, now the third step is to add a trend line that connects the higher lows in an uptrend or lower lows in a downtrend, okay, which we have already done. We have identified the lower lows in this uptrend, and we have drawn our Fibonacci retracement level from this low point to this high point in anticipation of a bullish continuation. All right, and we had the price pull back to the 61.8% Fibonacci level, and then ideally we are supposed to, if this bullish trend was to continue, we are supposed to have the price break above this 0%, right? We're supposed to have price break above this level, but we did not see that happen. So we can see that instead a triangle pattern was what began to form, right? A triangle pattern was what began to form. So right after that, we can see that we had a breakout. You can see right after this symmetrical triangle pattern, we had a breakout in the downward direction. Okay, now you will notice how the Fibonacci levels intersect with the trend line. Okay, these points are what we call confluence zones. So we can see that right about this point we had an intersection. About this point we had an intersection, and you can see that around this intersection point, this is a confluence zone. You can see that price found it difficult to break through that point, right? You can see around this point we had an intersection between this Fibonacci line and this trend line. Okay, so those points of intersections add even a layer of confidence in the signal, right? You had a layer of confidence to the signal. Okay, now those zones can also, signal potential entries, exits, or even areas to avoid trading. Okay, now here are some tips to maximize this strategy. The first is to always confirm the trend using other indicators. So for example, you can decide to add on another indicator to the chart. In this example, let me just use the RSI. Okay, now what do you watch out for? This is a bullish trend, right? So we had price bouncing off the 61.8% Fibonacci and the trend line at the same time, right? This was a confluence zone. So we watch out for the RSI, and we can see that the RSI was just coming up from the oversold territory, pointing upwards. So this was a good place to enter a buy because we had a confluence. We had a confirmation from the RSI. We had price bouncing off 61.8% Fibonacci retracement zone, and we had price bouncing off the trend line at the same time. So if we enter the buy around here, we could have considered setting our stop loss right below that swing low, and then for our take profit, we could have considered setting it at the nearest resistance. All right. We ideally, if this, like I said before, if this bullish trend were to continue, we are supposed to have the price break above this level. But considering the fact that price action can play out in either way, it could go in the direction we expected, or it might go in the opposite direction, right? So you have to be watching out for any potential reversals. Okay, ideally this would have been a great place to set stop loss, but take profit, sorry. But that is the reason why when you are trading, you sometimes you shouldn't set your take profit at the tip of the resistance, right? Because sometimes price might not get there. So just make sure that you are using a good risk to reward ratio. If we had entered here and we set a stop loss here, that would have been a risk of about, let's just say, about 100 pips. So our take profit can be at 200 pips. All right, so this is actually a resistance zone. So the nearest resistance zone is this 23.6% Fibonacci retracement zone, right? That would have been a good place to set our take profit and would have caught about 200 pips. All right, now remember that it's important that you look for price action signals, okay, like candlestick patterns around the confluence zones. A pin bar or engulfing candle can give extra confirmation, right? And then adjust your stop loss and take profit levels based on the nearest Fibonacci levels to manage risk effectively. Okay, remember, the market is never guaranteed to follow Fibonacci levels perfectly, but they provide a reliable framework for planning your trades. Okay, so by now you should see why the Fibonacci trend line strategy is such a popular tool among traders. It's not about predicting the market, it's about responding to what the market shows you. Okay, practice this strategy on a demo account until you're confident in your skills. If you found this video helpful, make sure to smash that like button to let us know. And if you haven't already, subscribe to the channel for more in-depth trading strategies just like this one. Hit the notification bell so you are always the first to know when we drop new content. Let us keep growing as traders together. Thank you for watching, and as always, trade smart, stay disciplined, and I'll see you in the next video.